In the midst of the Fed's announcement of 3 interest rate hikes in 2022, Liz Young, SoFi's head of investment strategy, in one of her blog posts stated that while 2021 was akin to running with the wind at our back in an investor's point of view, 2022 will more likely be akin to running into the wind for investors, and that the Fed's interest rate hikes is the major factor that will tighten the wind for us in 2022. How true is this?
How true, how true.
As an investor, how should we prepare ourselves for 2022? Hello and welcome to Wealth Gambit. On this channel, we cover the latest SoFi news. If you like that type of content, be sure to like and subscribe, and don't forget to turn on that notification bell so you'll get notified as soon as we drop new content. Please note that we are not financial advisors, so always do your own due diligence. Also, shout out to George LePage and Steve Jones for watching and commenting on our videos. We appreciate you. In this video, we'll talk about Liz Young's blog post on SoFi's website, which is titled 2022 Outlook Running into the Wind, and go over some key points on how Fed's interest rate hikes could possibly affect investors in general. As we've discussed in our previous video, inflation is moving at an unstoppable speed, and the Fed is planning to slow that down by imposing interest rate hikes next year. Inflation generally has a negative impact on the stock market. As prices of everyday commodities increase, people will be forced to reduce their standard of living. They'll stop buying things they can't afford, and this will eventually reduce the transactions in the economy. When this happens, investors in the stock market reduce their expectations of earnings growth and turn their backs on the stock market, eventually putting downward pressure on stock prices. In her blog post, Liz Young stated that 2021 seems to be the year of investors as major equity assets gained handsomely this year. The S&P 500 hit 67 new all-time highs, and the general market is expecting earnings growth for 2021 of 50%. On top of that, equity valuations remain above their 5 and 10-year averages and are elevated across most sectors. If rising inflation generally seems to have a negative impact in the stock market, then why does it seem like inflation adds to the increase in earnings growth this year? This might be caused by the Fed's effort to help the people during Rona by minimizing interest rates during these trying times. The federal funds rate target is currently between 0% and 0.25%. In her blog post, Liz Young wrote, "Rising rates typically present a headwind to equities and a particular headwind to high growth stock. And in her opinion, raising interest rates need to happen, and that any extension of loose monetary policy would be more detrimental to consumers and markets over the long run." Liz Young saw the Fed's decision on raising interest rates as the Fed trying to find a cruising speed that will work well with the economy. As raising interest rates connotate a negative impact in the stock market, Liz Young shared her 4 perspectives on what will happen in the market in 2022. According to her, there will be tougher competition in the stock market in 2022, and that companies will have to prove their merit to investors.
Look at me, look at how amazing I am.
She added that 2022's environment would encourage investors to calculate their risk more carefully, while a focus on valuations and quality would come back to the forefront. If you've been doing your own due diligence this year, then 2022 might make you dig a little deeper into your research before investing in any company. Liz also noted that there's the possibility of a fiscal spending plan that includes support for the clean energy industry, and this might cause more investors to become more enthusiastic in companies listed in the clean energy industry. And lastly, Liz noted that crypto will stay as a hot topic in 2022, and that more and more people, especially Gen Z and millennials, will invest in crypto. Liz believes that 2022 will be a departure from the trend we've been experiencing for the past 2 years, and that we're starting a new race. Liz warns investors that it will not be easy, it will not be smooth, the course will be hilly, and sometimes it'll rain. She ended her writing with, "But if we could find the stamina and strength to keep our money in the market and our fear in our pockets, 2022 can be a race we're glad we kept running through. Hang tough." Regardless of what will happen in the stock market in 2022, we're holding SoFi for a minimum of 3 to 5 years, and we're only selling if something fundamentally bad happens within the business. That's it for today's video, guys. If you find any value in this video, please like and subscribe and share it with someone who likes this type of content. Until next time, peace.